Investors and traders, welcome to the channel Market Chart Pattern. Today is 4th of January 2023 and another trading day for the new year has concluded, and we are going to do a quick recap for the day. As usual, this video is for educational purposes only and is not a financial advice. Okay, so what you're seeing is on my screen a synopsis of a very quick view of how the key financial instruments that we like to track actually trade for the day. So starting with the bonds, the 10-year treasury note, it was down for the day, but the bigger decline was actually in the 30-year duration bond, the ZP symbol. It went down for a little over 1 full point and a 1.01 percentage point. So we'll actually take a look at this chart soon after we go through the rest of the list. And the dollar, as we were discussing yesterday, the dollar was a little milder today, and it wasn't very strong. It wasn't very weak either, so it's just flattish. And the euro USD, you can see it gained a little bit, 0.21 percentage, and it has been the Japanese yen, the USD JPY pair, which has been the strongest. And look, even yesterday it was very strong, and today 0.93 percentage points. And GBP USD, it has been a little bit stronger as well, and closed in the positive territory, but not by a huge amount. The bigger change was in the precious metals, in gold. In gold, actually just managed to close in the positive territory just by very small amount, $1.4 and a 0.07 percentage points. Silver was flattish. And then coming to the US stock indices, the major ones that we like to track, the SPX, which is the cash S&P 500 index, it fell by 16 points or 0.34 percentage, and the E-mini futures contract was down by 16 points as well, 0.35. One thing that I would like to pay attention to is the close, 47.32 in a quarter. Yesterday's chart, we'll go through that. We were discussing 47.30 as a key point, and that was met, and that was also the first negative standard deviation, -1 standard deviation point, so it's pretty important. NQs again negative, in the negative territory, but not as much as yesterday, also getting very close to the -1 standard deviation level. Dow Jones had been the strongest of all of them, and managed to close just scratching to the positive territory by 32 points. Very interesting is the Russell 2000, because yes, the Russell 2000 was down pretty big, especially in the percentage points. It was the best loser, to be honest, however we want to put them. And today what it has done is it's just kind of flat, in my opinion, and also it closed above the -1 standard deviation. We will go through that, but let's take a look at some of the charts first. Okay, so we'll just open up the 30-year bond futures. This is long bond futures, and this is what we were discussing, that this has been a very strong move up, and of course this has also influenced the stock market, which since the end of October 2023 has been really strong, and now in the new year we are facing some negative days. But the sell-off so far has been orderly. We'll talk more about that. So here the key thing to note is that look, it closed below the 38.2% Fibonacci retracement, and there's a possibility that there is going to be a little bit more decline here in this one. But again, a really full percentage point, a little over 1 point. The bonds declined, and of course that did not help the stocks. Then let's take a look at the dollar. So this is the daily chart of the dollar index, and as we were discussing yesterday, the dollar has been pretty strong since the new year, and yesterday it went into this level. It just went into this gap, and we have this resistance here. It also completed the 50% retracement of this entire swing, and we were looking for some sort of resistance to come in the dollar index, and that today the dollar has been flattish. In fact, intraday it had been weaker, and what has transformed is basically a inside bar, and we need for further information, and tomorrow we are likely to get further information because tomorrow is the non-farm payroll day, and that news will come out, and that could have a pretty strong impact. It usually does on assets such as the bonds, the stock indices, and of course the currencies and the dollar. So maybe we'll get further information about this, and we'll have to wait and see how the report will be and whether the dollar will strengthen from here, or this pattern of lower lows and lower highs will continue. Again, to repeat, we are really looking for a very clean break of the 99 level that will give us further targets for the downside in the dollar. So tomorrow we should get further information. Quickly we'll take a look at now gold. So gold, again, not much change today. In fact, it just managed to close or scratch into the positive territory by the end of the trading day. So this is the daily chart for the COMEX gold futures chart. It is the continuous contract that I'm using. This continuous contract is built by the trading view, so we and some compared to some of the other market data providers, the closing prices might be a little bit different. Again, here we have the non-farm payroll coming in tomorrow, which usually impacts the currencies, the dollars in particular. So we'll have to wait and see. Usually the weaker dollar has helped the gold market, and here the key is what we're really looking for is there is still a chance, maybe even a sharp move right into the 2028, and if this gold begins to move higher, then we are looking at 2198 and then 2254, and just to draw a nice trend line like this, it also creates a confluence region around this 2030 2028 region. So that's for gold. Let's move to the stocks. So here let's have a very quick look at the S&P 500 cash index. Here we can see on the daily chart the index actually closed below the low of 20th of December, so it has taken this low out. So on the daily chart it is bearish, and let's actually move to the ES, which is I like to use for shorter term moves or trading purposes. Again, just to remind, this video is for educational purposes only, so it's just not any kind of financial recommendation. So here what we see is that in the just to remind, in the ES or in the S&P 500 E-mini futures, it did take out these all-time highs, which it did not do yet in the cash index. So here what we were looking at yesterday was this 4730 level, and I am just going to remind that this is very close to the standard deviation that we were looking at, the standard deviation figures. So that's, I've got those on the weekly chart. So here we can see that, so it has now actually matched, and there's a possibility that we could see some sort of a bounce. We did see the bounce come in this morning as well in the markets. In the afternoon the markets actually sold off, but the Dow actually managed to still scrape into the positive territory. So there's a possibility that perhaps we could have a pretty volatile session tomorrow because of the news, especially the non-farm payrolls. And yeah, maybe in the morning session it could be down, it could be up, but it looks like there is some sort of a bounce to be expected tomorrow, just because the indices are very close or are at those key levels that we were watching for. Now let's take a look at the NQ. There we go. So again, we had drawn this box yesterday, so the price has actually moved right into it, It's the 50% of this little swing here, and of course it found a lot of resistance. Initially we were thinking that 17,250 is going to be the figure where the market was going, but came very close. And now what we're looking at is that on the weekly basis we have the standard deviation figure come in around the 16,417, and the market has been as low as 16,436. So it did come pretty close. So you know, maybe it's just close enough as well. So that's another market which is really around the kind of figure we were looking for. Then let's take a look at the Dow Jones. So Dow Jones is actually very interesting because it's been pretty strong compared to the S&P 500 and also the Nasdaq, and Nasdaq has been the one which has actually been selling off the most and also dragging other indices with it. And here we were looking for the minus one standard deviation to come in around 37,313, and this index is way above that. So another thing to note at now, let's take a look at the Russell 2000. Russell 2000 has been the really interesting one in terms of the standard deviation figures that we were looking for. It was the first one to break through the first minus one standard deviation, and the minus two standard deviation comes around 1974. And today it traded, let me actually go back to the daily chart. It traded as low as 1965, and the interesting thing is that it closed at 1977 spot one. And look at yesterday, it was a big decline right into this key figure, and today it's formed some buying came right towards the end for this index. So again, it's fallen into the kind of the zone that we were expecting for, which these are the levels which we had actually put forward or set forth right at the beginning of the week, that we were expecting the markets to move in these ranges. And so far the markets have been selling off, but the sell-off has been pretty orderly. And what it means is that we are not seeing some sort of kind of panic selling coming in, though the kind of selling that we had seen during the crash of COVID in March of 2020, when markets was hitting the limits and circuit breakers being triggered. It's been pretty orderly and decline, and right into the kind of levels that we had been expecting for. Now, if these minus two standard deviation figures for some of these stocks indices begin to break to the downside, then we need to pay more attention. But tomorrow is also the last trading day of the week, so we'll have to wait and assess how the market is going to close. And for next week, we'll have new levels which I will discuss over the weekly update that I will be doing. So thank you very much for watching the video, and if you like how we do our technical analysis here, then please do think about subscribing to the channel to support our work. And if you like the video, then please hit that like button. It just tells me that people who are watching the video, they actually like the content as well. So thank you very much for watching. Good luck and good trading, and have a great day.